regrets, just touch and bounce. Every high got a come down sound. Every word got a price somehow. If I look back, I lose my cool. If I stay close up in my shore, you want deep, I want this all. I'm still. If I look back, I lose my cool. If I stay close up in my shore, you want deep, I want this all. I'm still.
All right, guys, what is going on? What is Gucci gang? Welcome to the live stream. Hope you guys had a good weekend. Hopefully, hopefully. Who do we got here, man? Who do we got here on a Monday at 12:05 p.m. Central? Felix, 2020, Mark, Slowly, AJ, Scott, Eberneth, Julius, Eric. Oof. 467. I don't know how to say that. Torty, Jay-Z. What's good, everyone? I got a mint, by the way. You think I sound different? I got a neuro mint. So I need some pick me up. I need a little, what do they call that in the doctor? The defibrillator. Caffeine is like my defibrillator, you know what I mean? I gotta wake up. Gotta wake up. Been up since like 9 a.m., but I gotta wake up, you know what I mean? Lauren. So I believe it was Wednesday the 6th that we did Unlearning Retailology, which was fun. Definitely talked a lot of trash, as per usual. But we talked about how retail concepts are exploited and they only work sometimes. We talked about how too much analysis equates to analysis paralysis. I went over law number 11, which is keep it simple. And I talked about one of the most basic first principles in high probability trading is trade in the direction of opposing liquidity. And then I spoke about how no one can serve two masters, for you will love one and despise the other. So you can't really do smart money concepts and retail at the same time. It doesn't work. That you have to rewire your brain's neural pathways. And you can do that through repetition by journaling, printing charts, and studying. And I told you that this will take time and cannot be rushed. And do you guys remember that? Drop a 1 in the chat if you guys remember that from Wednesday of last week. And if you're not a member here, you should be. But if you're not, hopefully you remember that. And I'll continue on a little bit from that. Because I freestyle my streams. I don't really have anything specific I want to go over. But there were a couple people. There was at least one that had some questions on today. And so, oh, that's way over there. So I wanted to go over a couple things with you guys, and then, you know, we'll have some fun, and I'll try not to curse, and then that'll be it. And then that will be it. Okay. What do you guys remember about the episode on checklists? I'm not really sure which episode that was. I think it was 3 or 4. I don't remember. But we did talk about checklists. What do you guys remember from that? What were the 2 checklists that we went over? I'll give you guys a minute to figure that out. Type it up in the chat or think it over. There we go. He said good sleep. Yeah. I don't know what that is. I don't know what that is. Mental and trading, right. Felix said most top tier people from specific jobs use them. Yeah, very vague. Felix, you're fired. You're fired. You mean like pilots, surgeons, astronauts? Mm. Mm-mm-mm. Very important jobs. Very, very important jobs. Jobs that hold lives in their hands, if you will. Yes. Okay. Under, that's all on like the mental side. Under the technical side, what's on your list? Under the technical analysis side, I mean, I guess you could include fundamentals if you like, but I don't really care about fundamentals, at least for day trading. So what are some of the things that you look for? Yeah, there you go, slowly. It could be as simple as time, price, context. Yeah, that's a law too. That's my law, baby. That is my law. Okay, phases of price, market maker models, framework, same thing. Macros, timing tool, I'll allow it. What else? Let's see. So we did framework. We did macros. Okay, so we'll categorize macros under the time element. Time has many elements to it. Framework does too. Day of the week, timing tool as well. Target equal highs or lows, i.e. the original consolidation. Okay, I'll allow it. I'm trying to target internal lows right now. We'll see. We'll see. Not always right, but we'll see. So we'll categorize that as liquidity. Anything else? No, John, I'm waiting for you to tell me. Y'all piss me off, dude. Economic calendar. Move this over. Economic calendar, top-down analysis, right? Multi-time frame analysis. Framework, market maker models. If you like Wyckoff, you could do that too. Not for me, but if you like it, you like it. If it works, right? Liquidity. So there's a lot more to it than just equal highs and equal lows. There's session highs and lows. I'm going to go over equities opening range for you today again. Time, hourly, day of week, macros, final hour, so on and so forth. Sessions, hourly opens, all that stuff. Risk. I won't really cover that. And of course, adding your own. So why would we need something like this? Because I think if you look across Twitter, which I tell you guys to stay off of, even though I'm on it, because I'm like talking shit a bunch of or under a bunch of people's posts because they're stupid and they copy and paste from ChatGPT. It's retarded. Literally, it's a nightmare. But what you'll see is that a lot of people make mistakes that are easily avoidable. Correlated assets. Okay, there you go. David, thank you. What a lot of people see, here's the thing. In the retail space, your education, right? Meaning if it's like the trend lines and indicators and stuff like that, your world, that world is so limited in what's available. It's kind of like trying to play cards, right? Every card deck has 52 cards in it, right? Imagine playing with a deck of cards that has like 20 cards in it. Does that make sense? Like, how well would that game go? Whatever game you play, it doesn't even matter. But how well would that game go if you're playing with 20 cards out of 52? If you're missing the queen of hearts, the ace of spades, the two of clubs, you know, so on and so forth, that's not going to go well. And the issue is the retail space doesn't even know that the deck of cards they're playing with is missing pieces, or missing cards in this example, or trying to put a puzzle together that's missing pieces. It's the same analogy. You're not working with all the information. Your highest level of ability will be limited to the extent of that space, if that makes sense. So if you aren't aware of stuff like pools of liquidity, you're not going to know that the market attacks these. So you're not going to have a high probability bias because you're going to be looking at something else. So unless that's something else, sorry, I'm almost done with this mint, by the way. Unless the something else that you're looking at aligns with the concepts that we use here, you're going to be taking low probability trades, period. So when they lose a trade, which is going to be a lot and very often, they are not going to understand what they did wrong. They're not going to understand. And if you do not learn from your mistakes, you are doomed to repeat them. Most of y'all have heard that before. Those who don't know history are doomed to repeat it. That's actually a quote from somebody I read the other day too. And it's wonderful. By the way, I wasn't going to get into this until later, but by the way, guys, this book right here is absolutely phenomenal. Part 3 was a little bit of a drag because it's very detailed. And some of the math stuff, I would rather shoot myself in the face than to read it. But I still got through it. And part 4, oh, dude. Part 4 alone makes this book worth it. It's called Seeking Wisdom by Peter Bevelin. And I got a used copy because it's a pretty expensive book, actually. And I didn't know if I'd like it or not. So I just got a used one. Pages are falling out. So I'll probably buy a new copy. But it is wonderful. And that was actually a quote I came by recently. So anyway, my point is, traders in the retail space or even in the smart money space, that if you're not working with the full deck, if you're not working with all of these tools to help you, if you're missing tools, that's going to become a problem. I'll give you an example. I always do that, of course. I'll give you an example today. So I think we went over this on Monday, but I'm going to say it again. Monday, equities open. I would just go ahead and toss it up to the entire session. Monday AM session. Tricky. Usually Monday AM session is tricky. Why is that? We've gone over this many times. You tell me in your own words. Why is Monday morning, Monday AM session, or the very next session after a 3-day weekend? Like if Monday's a federal holiday, if Mondays the markets are closed, then Tuesday AM session would be the same in terms of trickiness. All this retail talk, I'm allergic to it, so that's why I'm sneezing. I'm allergic to this stuff. Everyone's greedy to participate. Right. Don't want to miss moves. Yeah. Everyone is addicted to trading. Yeah. I mean, I can see that. I can definitely see that. People eager to trade, building liquidity. I don't know about building liquidity, but for those reasons that you guys threw in the chat. Everyone's excited to get back into trading because you can't really trade on Saturday and Sunday unless you trade Sunday night. I wouldn't, but you're going to do what you're going to do. So Monday morning, people are coming in, wanting to trade, wanting to pass their funded account, wanting to, take trades. So back to this checklist idea, okay? Back to this checklist idea. If you do not have a checklist that you're working with, meaning, and it has to be a good checklist too. It can't be some garbage checklist, trend lines and RSI. Okay. That's not going to be a good checklist. It's not. It's just not going to work. It's not going to work well. Okay. Economic calendar, top-down analysis. Okay, cool. Economic calendar you can do on your own. Go to Forex Factory, take a look. Top-down analysis we can do. Very simple, very easy. It doesn't take a genius. First thing we look at is our daily. We could look at the weekly as well. Now, the daily has been an absolute smorgasbord of gains. Sidebar for a second. Intel, it was actually up a little bit more today, but it was like 13% on Friday. This has been absolutely bonkers, insane, absolutely phenomenal. Evil old Trump, right? All the people who missed out. Yeah, I don't even want to get into it. We're at all-time highs. Okay. We are at all-time highs. A lot of stocks are there. Triple Qs, I think, are there. Nasdaq is there. A lot of people's RSI is going to be screaming overbought, and they're going to look for shorts. Awful idea. Awful idea. Okay. So with that in mind, if retail is looking for shorts, if a lot of people are looking for shorts, then it would behoove you to probably look for longs. Okay. I forget which law it is. I actually just posted it the other day, or yesterday rather. The 48 Laws of Trading by yours truly. Just got over 700 likes. Very nice. And it was one on doing the opposite of everybody else. Law number 39. Here we go. Law number 39. Contrarian is king. The law of the masses. Oh, I didn't center that one. I fucked that up. Or screwed that up, sorry. Observe the masses and do the opposite. Most traders are wrong at market tops and bottoms. So law number 39 coming in with a banger today. All right. Thank you, 101. Thank you for that. Yes. If most people are looking for shorts, right, then ideally we'd want to be wrong. I mean, we want to take the opposite because they're likely to be wrong. Okay. So we have quite a few things in here to go over. First thing I'll tell you is, let's go back to our checklist for a second. We did top down already. We're at all-time highs, right? Can be a little bit tricky. Even for me, it can be a little bit tricky. Framework, we don't really have one here. Liquidity, so that's going to be our next thing. Okay, liquidity. Let's mark up some pools. And obviously this is hindsight because it is 12:25 and this is like, early in the morning. What can you do about it? One of the easiest things to do is equities open. Now, you don't need the indicator that John Doe graciously made for us. You don't need that. But if you've never heard of this before, it's the first 30 minutes. It is the highest high and the lowest low in the first 30 minutes. Now, I'm Central Time, which means the equities open for me is going to be 8:30. Okay, so that is the lowest low at 8:30. all the way until 9 o'clock. Okay, so 9 o'clock is about right here. And this is what the indicator does. It's going to mark out the highest high and the lowest low within that time window of 8:30 to basically 8:59. And then as soon as 9 o'clock opens, right? So like that right here would be a low, but this is the lowest one. Okay. So right in here, we automatically have two different pools of liquidity immediately. Okay. At both. Well, when price is in the middle, yeah, it's going to be at both. Now, if this, let's say 9 o'clock were to continue in trading lower, then yeah, that pool would no longer be there. And then this would be the opposing pool. When price is in between two pools, that to me is lower probability. And I would wait for one to be taken, whether it be the low or the high. I don't know. I don't always know. I don't even try to do that. That's my default is, okay, we're in the middle. All right, we got to wait for one of them to be taken. Don't know which one. Don't care. Okay? So we're going to have a pool here and here. Does everybody see that? That is not difficult. It's not hard to understand. Highest high and lowest low in the first 30 minutes. Not complicated. No chemistry formulas. No X divided by C equals MC dookie shit. None of that stuff. Okay? It's just the lowest low and the highest high in the first 30 minutes. Looking further to the left, okay, we have a little bit more to work with. We have London. So London's low is actually going to be right here. And London's high is here. But that low gets taken right there at 747. And then that high already gets taken here. So we do have two pools that are in close proximity on the same chart. These are... this is the electronic hours chart. This would also be seen in regular trading hours. But these two pools are somewhat close together, about 20 points apart, roughly. Okay? Drop a 2 if you guys are with me so far. You understand, right? The whole key to this, if you hopped on late, is don't be late. But if you are, we are going over the checklist, okay? Having a good checklist, not some BS checklist. A checklist that actually works. Okay? Economic calendar, you can look at that at your own. Top down, we're at all-time highs. There's not a lot to reference. It can be tricky, but not entirely untradeable. We don't really have a framework yet. And now we're looking for pools of liquidity. So, okay, well, where are they? We drop down. We have equities high, equities low, equities open, high and low. And our pre-market low is somewhat in close proximity to this low. So we have a pool up here for anyone trying to short. We have a pool here for anybody that's already long, and a pool down here for anybody that's long either during that move or even in the pre-market. So we have multiple pools, 2 down here and 1 up here. So again, not complicated. If if things were different, like if London's low was down here, then this eyeball would go down there for London's low. But since that low is taken here, I'm using this one. Okay, every day is not going to be the same. It's going to be different. But for today, this is the information that we're working with. Okay. So we went a little bit over time, and then, you know, risk is whatever you want it to be and so on and so forth. So with that being said, this is all the information that we have so far. 2 pools of liquidity down here, 1 up here, and at 9 o'clock, right? I don't know. Okay. This is one of the hardest things for me to trade, which is why I don't trade it. When price is at 50% of multiple pools of liquidity. If I touch this, I will get my face ripped off. Okay. I will. I'm not good at trading it, so I don't. Right? Sometimes to perform better, all you need to do is avoid doing stupid shit. Okay? Life-changing stuff here. That comes right from Charlie Munger. Charlie Munger and Warren Buffett, the greatest investors of all time. So if you think that's stupid, I'm not your mentor, and go follow somebody else because I can't help you. So by avoiding stupidity, we can do less bad. And if we can do less bad, that means we can have a better opportunity to do more good. All right. So as price, moves, right? If I was in front of the charts at 918, 920, if I was watching this, 100% in my mind, I would think, okay, we're probably going to attack this pool up here. If we get an A-shaped reversal, maybe that'll be a short to then rip for these lows. That's what I would think, right? That's just what my mind goes to. And then look what actually happens. I 1,000% would have been wrong. And instead trades and it does it very viciously too. It trades all the way down here, taking out this low, moving past right for equities here, a little bit of a retracement, and then bang, seeks for the pre-market low right here. Okay? So what does that tell you? What does that tell you right here? Remember the context I've already given you. We have one pool up here. We have two pools down here. Think about that for a second now. Think about that. Pause for a moment. Reflect. Reflect for a second. Do you think that's just random information? None of this is random, by the way. In case you've never heard me say that. None of this is random. Okay? I love using this analogy. It's one of my favorites. If you were a bank robber, or if you were a person who robs houses, please don't ever do that. You're a piece of shit if you do. But think about it. If you were down on your last, you had no other option, and you had to go rob somebody's house, would you A, rob somebody that's broke, or B, rob somebody that's wealthy? What do you think the answer is going to be? Are you going to rob somebody who probably doesn't have a lot? Okay, we're going to take their toaster and their TV. We'll get like $50 for that at the pawn shop. Wonderful. That's ass. Or are we going to go maybe to a upscale neighborhood? Find somebody who doesn't have cameras, who has nice stuff in their house that could easily be, fenced or whatever. You're going to go rob the house where you get a bigger score. That's just better RR. If you're going to start, risk prison time, you might as well go big or go home, right? So think about it. David, don't come to my house. You'll leave in a bucket, buddy. You'll be Swiss cheese by the time you leave. But the point is, okay, my whole point is there's one pool up here. There's two pools down here. So why does it, why would the market do this, right? It trades all the way up here and then drastically comes down, reaches for that, right? Okay. Look at this. You want some supply and demand shit? Look at where those bodies are. Look at where those bodies are. Okay? Where are the bodies at? The bodies are closing above that pool, opening above that pool. More supply and demand concepts with John Phibb. All right? Subscribe for more. Then, okay, what have I been teaching you about the shift in the state of delivery? There have been at least 2 or 3 posts on my Instagram. Over 1,000 likes, by the way. Thank you guys for that. Makes me feel good, right? 5th year high school student here. But I've been teaching you that you wait for a pool of liquidity, you wait for price to leave it, You wait for manipulation, right? What's after manipulation? The shift in the state of delivery. Bang. It's right there. Okay? It's right there. Look at that. Watch this shit. What's the open on that? 29,296. Can you guys see that? Drop a 3 if you guys can see that. I'm highlighting that down candle. I'm taking my mouse and I'm clicking the left click and I'm holding it. That's how you get that information. If you don't have that, by the way, it's up here. Values tooltip on long press, that has to be checked. If you guys didn't know that. Okay? Make sure that this is checked on. When you hover over a candle, left click and hold, and it beautifully opens that window of the open, high, low, close information. Thank you, Convicted Capitalist. I appreciate that. I show you a lot of game-changing shit, by the way. If I can let my ego slip for a minute. This is 29,296, right? Watch this. What's that candle's low? 29,295.75. It trades into that by 1 tick. Ooh, 1 tick. Look at that. Shift in the state delivery. Bang. Right down. Look at the low. 295.75. Beautiful. Chef's kiss. There it is. Look at that. Shift in state delivery. Trades right down into that down candle. Okay. At 934. Then you also have this imbalance. But wait a minute. Something's not right about that. There's a gap right there. So you got to include that gap. All right. Here's some more supply and demand shit for you. Bang. Trade outside of it. We wick through it, but the bodies are respecting it. Man, I love supply and demand, John. I love it. I love it too. I love it too, baby. That's why I teach it to you. Look at that. Now watch this. Think about it. Think about the information I've already given you. We have one pool up here. We had 2 pools down here. So where's most of the money at? It ain't going to be at the 1. It's going to be at the 2. Multiple pools. Okay? So we just took this low here. That's actually another pool, by the way. Because after this run higher, that's going to be a pool. So we have 1 pool here, 2 pools here, 3 pools, all in alignment, that all just got mega wrecked. And, right? And phases of price, expansion lower met with expansion higher. There is your V-shaped reversal. So now what is that setting up? Think about it. Think about all the things I've ever taught you. Let's go back to some of the laws. Let's go back to some of the laws here. Excuse me. Law number 2. Okay. Right here. Law number 2. Price seeks liquidity and inefficiency. That's all really price looks for. I mean, yeah, it does consolidate, but I'm saying what it looks for is only 2 things. Inefficiencies and pools of liquidity. That's it. Again, it ain't complicated stuff here. So we have the 4 ways that it moves. It'll go from imbalance to imbalance, imbalance to liquidity. We have liquidity to liquidity, and then liquidity to imbalance. Now think about this. If the market moves from liquidity to liquidity, okay, wonderful. If we have 3 different lows that just got swept and a V-shaped reversal, right? Where do we have another pool of liquidity? Again, equities open high is way up there. But you also have one right here at 420. Can't escape it, dude. I keep telling you. Can't escape the 420 level. I don't know if Mason and Willow are here, but they get it. Right? And that level, bang, got smoked. I know I had the best analogies, right? Yep. So what is price likely to reach for? We already got downside. We're going to have upside here and here. Market trades higher, small retracement, left behind some lows, no big deal, and then bang, runs for both of those. Small retracement, and then a continuation. and sit on. Here we are right now. Oh, we actually didn't go for those lows. See? Tricky. Sometimes it can be tricky. But my point is, you have to wait for probabilities. Okay? We have to wait for probabilities. Think of it like this. I can't rotate that. Okay. Think of it like this. Y'all ever been on a seesaw before? Right? Where one of you stands at this end and the other person is at this end. Right? Beautiful artistry here. You see that? When price is at 50%, and that's why this line is also here. This dashed line here is 50% of our range. When price is near that, I have no clue. I have absolutely no clue where price is going to go at that point. I have no idea. Zero. I'm way more likely to get it wrong than I am to get it right. So I'm absolutely staying away from that. 100%. So when we have a small consolidation here too, but when we drastically trade lower to take multiple pools of liquidity and get a V-shaped reversal, now the probabilities are not 50-50. Okay? When price is in, when price is at 50%, it could go either way. That seesaw is not, it's not tipped in my favor. I only want to trade when the scales are in my favor, not the other way around. It's also Circle of Competence by with Charlie Munger as well. If you play a game, if you play a game and you don't know the rules, you are going to lose. If you are going to take a trade and you don't even know what the probabilities are, you are going to do badly. But if you do know when the probabilities are more in your favor, right? Meaning we have a higher probability of going higher versus going lower. That's what this is here. Okay? So now we have a new range. That pool of liquidity way up here to the low that's been set. We have a new defined range. And after we cross 50% here, well, technically here, this is a discount. Anything within this range, meaning as soon as that low is created, anything inside this range. So that means that down candle there, the candle after that, the inversion, the return to discount. There's a down candle right there as well. Not really my favorite, but that low is actually swept, and then there's a down candle here to go higher. All of this in here, the low, after that, right after that, a little bit later, all of that stuff, the probabilities, just like I said in my, go to my Instagram, dude. Go to my Instagram. Go to my most recent post. My most recent post. And said, whenever you're within that range, once you have manipulation, everything after that becomes, the probabilities are that we are going higher, not lower. And that was put out a few days ago. I've talked about that for a long time. And then look at what you see today. You see the same shit. Oh, the markets aren't the same, bro. These markets aren't the same. But they're doing the same things. So I don't know where you're getting your information from, but you're not looking at the market I'm looking at. Makes no sense to me. We still get V-shaped reversals. We still get changes in the state of delivery. We still get inversions. We still get premium and discount. I don't know what the fuck you're looking at, but it ain't this. So anyway, David asked a question. I've been ignoring it. So when multiple pools, we can expect immediate reversal / impulse without needing to consolidate or accumulate. Okay, let me pause here for a second. Let me understand your question. When there are multiple pools, we can expect an immediate reversal without the needing to consolidate. I did. Let me just clean this up a little bit. I did see a post yesterday or the day before. Inversion here as well. See, imbalance, we trade through it. Back into it. Can't get in the bottom half to go higher. Shift and a stay delivery here as well. Down candle respected to go higher. Weird. But someone had made a post on X or tweet, whatever you want to call it, and they said that price has to consolidate in order to see a reversal. I really had no idea what they were trying to say. I don't even know what they were pointing to. People just say stuff and it's vague and there's no chart and it's just copy and paste from ChatGPT and it's a sophistry is what it is. Do you guys know what sophistry is? Or sophistry? I don't know how to pronounce it. SOPHISTRY. Sophistry. Sophistry is, quote, the use of clever but false or fallacious arguments typically intended to deceive. It is a form of specious reasoning that appears sound on the surface, but is actually illogical or misleading, often used to win debates or persuade rather than to find the truth. Bang. A lot of that, what you see on Twitter, a lot of what you see in the retail space is sophistry. It sounds good, but it's bullshit. Simple. Buy low, sell high. Sounds good. Bullshit. What's low and what's high? And that's like the key ingredient right there. Which is why when it comes to the charts, I tell you how I personally define my range. My range is I'm going to target something. If I'm targeting upside, then I need the low to be set. And the low that's going to be set is either going to do one of two things. It is either going to sweep previous lows or, and I do mean the only exception to that, there is only one exception to that, is if there is a divergence. That is the only exception. So the low will either be set by manipulation or professional accumulation. And you can long after that too. But again, we have to define, and that's how you know this is manipulation, by the way, in case you guys didn't know that. I talk about this all the time, but if you've never seen this before, this is one of the most gangster fucking things you can do. Excuse my language. I'm trying. When one asset sweeps lows and the other, its correlation doesn't do that, that's how you know this is manipulation. Oh, the markets aren't manipulated. Okay. But they'll take your stop loss at the low and then run to where you thought they were going to go. But they aren't manipulated, right? All the floor traders from the 80s and 90s write books and tell you, hey, yeah, us floor traders would manually run stops. But you don't think it's manipulation, right? You're a fucking idiot. When lows get taken and its correlation doesn't do that, that's how you know this is manipulation. They're sweeping stops. They're taking multiple pools of liquidity. So after that, they're going to seek opposing liquidity. It's one of the easiest things you can do. One of the easiest things you can do. If you never learn anything from me ever, or if you never remember anything I tell you, remember this. The easiest trade you'll ever take will be in the direction of opposing liquidity. Period. That's the easiest way to get on side. It is the easiest. You will not find anything easier that I know of than that. Let price build some highs. Let people think it's going lower. And when they get bamboozled, right after that, it's going to be some of the greatest trades you'll ever take. Some of the greatest trades you'll ever take. The drawdown will be very minimal, if any at all. And it will scream towards your TP. Maybe not the entire move, because there is going to be retracements, yes. The algorithm has to deliver, okay? It's not supply and demand. The algorithm has to deliver somewhat efficiently. Yeah, slowly bamboozle. But you can sit through those retracements, okay? If you can trade somewhere in here and you can't sit through this little bit of a retracement to go higher, you have an issue, my friend. If you can't handle a little bit of drawdown on something like that, you have issues, okay? But nonetheless, it is one of the easiest things, if not the easiest things you can do. If you don't want to trade the first 30 minutes, then don't. I usually don't recommend it anyway. Wait until 9 o'clock. Wait for the first 30 minutes to go by. Let everybody else get knocked out and then go bitch on Twitter because they don't know what's going on. They don't know what to do. Oh, yeah, we're going to trade the orb. Yeah, we're going to short below equities open low. Okay, yeah, you short that. And you're going to get absolutely railed as price screams against you. Go ahead and trade the orb. Do it. Oh, we're going to buy above. We're going to buy that breakout. Okay, buy it. And then get wrecked on the way lower. Stupid. Stupid. Half of the time, okay, winning half of the time is simply avoiding being stupid. Just avoid being stupid. I kid you not. Avoiding stupidity is one of the easiest ways to eliminate a lot of stupid losses. And that's not just coming from me. That's coming from Charlie Munger and Warren Buffett, the greatest investors of all time. And you want to argue against the advice of the greatest investors of all time, you should not be here. Because I don't have anything better than that. I don't have anything better than that. These guys knew what they were doing. Because Charlie Munger, if you guys didn't know, he passed away in 2023 or 2021. It's in the video somewhere. And Warren Buffett just stepped down as CEO of Berkshire Hathaway. So, you know, we've lost the legends. They're done. They're done. But the lessons that they have left behind are phenomenal. So you can either listen to that or ignore it. But if you take what they give you, and it works in day trading as well. That's what you guys have to understand. These mental models, all of them, and not just like general decision making, but when it comes to mental models and applying them to trading, they're universal. They work everywhere. They work in life, they work in decision making, they work in relationships, they work in day trading, they work in business, they work in everything. Because they're just principles that work in life in general. And thank you, Mark. I appreciate that. I keep telling you, dude, I don't try to come on here and give you guys dog shit information. I give you the best of the best stuff that I can possibly come up with. And it's not even me coming up with it. I don't own mental models. I had never heard of mental models until a couple years ago. And I've been digging into them, and they're really wonderful. Like, seriously, they're awesome. And I keep sharing this stuff with you guys. I tell you, oh yeah, go read Poor Charlie's Almanac. Go read Seeking Wisdom by Peter Bevelin. Go read The Great Mental Models from Shane Parrish. Like, I'm literally giving you where I'm getting the information from. I don't just take it, pretend like it's mine. What am I, a 17-year-old mentor? Come on. We're not doing that. We're not doing that. I'm not screenshotting your shit, posting it to my Instagram. That happens to me. They screenshot my shit. How about that? I know. Ego's hard, man. It's difficult. It's not luck, Jay-Z. Luck has nothing to do with it. Look, I'll give you some insight. Okay, you ready for this? If anybody ever tells you good luck, they're an asshole. Or they don't mean it. Okay? Luck has nothing to do with it. You cannot luck your way to success in day trading. It doesn't work. You can't be that consistently lucky. So whenever I ask you, man, we're either the luckiest group of folks in the world or the markets are ran by an algorithm. We aren't that lucky. Luck does not really exist in day trading. It just doesn't. Even if it did, like, oh, I got lucky once or twice, you will not find consistency in luck. It's not there. It's not there, I promise. So luck has absolutely nothing to do with it. Nothing about this is lucky. It's intentional. That cracking correlation where I anticipate manipulation is fake. What do you need to be sure it's professional accumulation? David, I'm not sure when you typed that in the chat, but that's right here. One is manipulation. If it's sweeping lows, that's manipulation. ES by staying higher, okay, that is professional accumulation. That, I believe, comes all the way from Larry Williams. There's a book, and oh God, this book's like 40, 50 years old, bro. It's The Secret to Selecting Stocks for Immediate and Substantial Gains. Now, Larry set the foundation, okay? Larry, Mr. Williams, he did not write books like on day trading. He was not posting charts with like, a 5-minute time frame, okay? All his stuff was on the daily. What he did is he would compare individual stocks to its index, right? So like Microsoft to the Nasdaq or Google to the Nasdaq type thing. So he would say, all right, well, look, you have the Nasdaq making a lower low, but you have Microsoft or Google or whatever stock he talked about making a higher low against it. So the professionals, meaning smart money, is what like he was alluding to. They're the ones that are buying the stock, and that's why it's not going lower. It's not making a lower low, it's making a higher low. So his label was professional accumulation. Now, again, that was like the 70s. He talked about that. In the 80s, he talked about that. But since we are day traders, we are taking that information, and since price is fractal, we can shrink it. Honey, I Shrunk the Kids, right? So we can take higher time frame concepts and smush them onto a smaller time frame, like the 5-minute or the 1-minute. And that's how you can get these really, really good entries, which is why people who say, oh, you should stay up to 1 minute are fucking retarded. Again, excuse my language, but they're stupid. They don't understand. Oh, I can trade the 15-minute better. Wonderful. Then you trade that time frame. But don't tell other people not to trade that time frame. Just because you can't do it doesn't mean other people can't. That's stupid. So hopefully that gives you some insight, David. It's correlations, okay? Look at this. We haven't looked at ES all day. We have not gone into the details of ES one time, right? But look at this. You see that down candle here? There's your shift in a steady delivery. We have a down candle here. That gets traded through. Oh, but that didn't manipulate. Price can make a low without manipulation. You're just an idiot. You don't know shit. You think it has to be manipulation. That's wrong. And that's why you shouldn't have a 17-year-old fucking mentor or a 25-year-old mentor. They don't have the experience, bro. There's your shift. Okay? Trades through that down candle right here. And then look at that. You want to see some more supply and demand shit? Look at this. Look at the S&P. Okay? Look at this. You're going to tell me it's buyers and sellers, right? When hardly any of the retail space fucking trades this way, right? And it's not an algorithm. When all of the bodies, all of those are not trading inside of that. They are all stopping on a dime right there at that opening price. Okay, the opening price right there is 74.31. Where's that open? 74.31. Where's that close? 74.31. Where's that open? 74.31. And that's fucking supply and demand? Are you serious? Get a grip, dude. Get a fucking grip. Then we trade higher. Imbalance here. Price trades right into that at 9.49. And then, oh, guess what? 9.50. Bloop. Right up there for a new high. Oh, but macros don't exist, right? 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 T trades. He thinks this shit doesn't exist. But there's 950 to 1010. Right here. But yet price, when does it get animated? at 9:49, and then 10:50, we see further animation to the upside. But yeah, macros don't exist, right? You're going to argue with what the charts are telling you. You're fucking stupid. You cannot argue with price. What has already printed has printed. What price is right now, you can't argue with that. 74.49.75. That's what price is. It's not anything else. You can't argue that. And you're going to say that, oh, this stuff is random. This stuff is random. You know, oh, these time windows don't exist. If you're not an independent thinker, you're a sheep, okay? And you're following some absolute retards, okay? I love T-Trades, you know, as a trader. He's a cool guy. I got nothing against him. But he thinks macros don't exist, and that's stupid. So, none of us are perfect, even myself. Okay, I'm not perfect. I'll get it wrong, or maybe I've taught something in the past that wasn't correct. You know, it's definitely possible. But all I'm saying is you got to think for yourself. You find out what works, and you make your own checklist, okay? And you stick to that. Don't try to think that you're going to remember it all. Because whenever you get in front of the charts, whenever you get into a trade and you don't have your checklist in front of you, and you're in an actual trade, or even like on a funded account or a combine or some shit, you're going to be like a deer in headlights, and you're not going to know what to do. So there's that saying, no one's an atheist when you've got 10 contracts on NQ. Or no one's an atheist when you've got multiple contracts on NQ. Yeah. Look, prayer can do wonders for you in life. But when it comes to day trading, it's better to have a checklist. It's better to think in terms of probability. All right. So with that, hopefully that helps you guys. You know, the markets can be tricky, dude. They can. I don't always get it right either. We had some lows in here. I personally thought we were going to sweep that. But guess what? We didn't. We went higher instead. I don't always get it right. But I'm teaching you and telling you how to find the probabilities. Okay. Now I see what you're doing. Or kind of. I mean, I can't see shit with these glasses. They're anti-blue light, but I mean, I love them. I'm not going to get rid of them, but sometimes I have a hard time seeing shit. Okay, so you were trying to long this right here. Something like this. Yeah. Like this imbalance here, this is not manipulation. That's not manipulation. And that's why I opened up with the checklist. And that's why I opened up with, we kind of went through a couple of them. We skipped like economic calendar, but we did go down to liquidity. And then I told you, okay, we have pools of liquidity. Equities open high and equities open low. And then we have a pre-market low as well. So what you're doing down here, and I'm not roasting you, by the way. I've taken more stupid trades than probably the total number of trades you've ever taken. Is why I know a lot of this stuff, because I've done a lot of stupid shit. You're essentially trying to buy this to go higher. I can see why you did that. But now you see pool, 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 and you're trading within multiple pools, and that's tricky. I am not good at trading that. You might be. I suck at it. I can't do it. There are certain things I can't do. Trading within a range with multiple pools of liquidity is one of them. I can't do it. I will get it wrong probably 7 to 8 times out of 10. I'll probably get it right 20% of the time if I do it. I'm just not good at it. And this is why. And that's what I'm trying to teach you. So remember, Jay-Z, what I said earlier. You can do really well by simply going, okay, here are like 100 trades, right? And 50% of them I could have avoided by simply not trying to pick the bottom, or trading within a range of 2 pools of liquidity, or trading during a certain session that may not have high volatility, or, you know, whatever the case. And so the idea is we're not going to eliminate all of the losses. Nobody can do that unless you just don't trade at all. That's the only way. Or just buy the S&P, you know, buy SPY and then never sell it. Okay, yeah, you'll be up in 5 or 10 years, but who the fuck's going to do that? Right? You can't day trade that way. So the point is, we're not going to eliminate all of the losses, but we want to eliminate the stupid ones. So if we can at least eliminate half of those, imagine what that would do for your profitability. Imagine what that would do. So again, sometimes you can do really well by simply avoiding doing stupid things. If you cannot find the probability, that is not a trade worth taking. I do not want a coin flip. I sure as shit don't want something less than that. I want something that has an 80%, 90% likelihood. Oh, you can't calculate that. The fuck I can. Of course you can. Multiple pools of liquidity taken with a V-shaped reversal? Yeah. You're now in the category where you're definitely above 50%. You have a 60, 70, maybe even an 80% likelihood that we are going to go higher, not lower. So if you get it wrong, maybe the market does come back for another low. You get it wrong then, shit. You can't expect perfection. But you can stack probabilities. And that's what I'm trying to do. It's what I do. And the only time I get it wrong is if I, you know, or if I take a loss, it means I got it wrong. Or there was manual manipulation. Which I don't know how to, I can't protect you from that. Because I don't know when they do that. They don't tell me. They don't call me. You know, with 58 viewers and go, hey, John, we're going to sweet price. Nobody tells me that. So we work within the limitations that we have, right? Maximize the upside, maximize the good stuff, the good habits, the good trades, minimize the bad habits, minimize the stupidity, minimize the loss. And if you can do those things, bang, profitable. So anyway, David, top 3 books I've already shared on my Instagram, and I shared on my book page as well. There's a lot of good books for traders. Meditations is good. Trading in the Zone, Disciplined Trader are really good. Stillness is the Key is a good one. Ryan Holiday's a bit of a goober, but his work's pretty good. Discipline is Destiny is also a good one from him. The Practice of Groundedness by Brad Stulberg. The Inner Game of Tennis by Timothy W. Galloway is a good one. I've already shared Seeking Wisdom by Peter Bevelin on here. So I'd start with those. So, all right, y'all be good, be blessed, man. We'll be here same time, same place tomorrow on Tuesday the 12th for another free live stream. Yeah. So make good decisions. Don't do anything stupid. That was kind of the key to today's stream. Don't do anything stupid. Make good choices. I'll see you tomorrow.